And of course, we have to show this before every speaker. I give you a couple of minutes so you can read it over. I'll give you like 30 seconds to read it over, and then I'll give you the synopsis. All right. I got to be quiet every once in a while. Sometimes the lawyer looks at these and he's like, if you just shut up, they can read it. So I'll give you the quick elevator pitch. Trading is you can lose money trading. The stuff that you see here is not independent financial advice. Past performance is not necessarily indicative of future success. We recommend that Traders on Trend, and of course the people who are at the Summer Market Summit, we all recommend the same thing. You should only invest what you can afford to invest yourself, and we can't tell you how much that is. You have to kind of figure it out on your own. And the idea is trade smart. Let's go to our next slide, Rod, so we can tell everybody just a little bit about Jim before he takes over. So today, Jim is going to be telling us how to hit the bullseye with your stocks and your option trades. Now, Jim is an experienced veteran of the financial markets with 20 plus years of experience and expertise. He's an editor and investment director of the Intelligence Report, Successful Investing, Bullseye Stock Trader, High Velocity Options, and the Deep Woods e-letter. And you wonder how he has any free time, right? He's one of the top financial bloggers in the world, recognized by TipRanks for over a decade, and he's an author of notable books, guys, including The $1 Billion Green and The Wealth Shield. Now, Jim collaborates with Investors Business Daily founder on stock picking courses, and he has a bachelor's in philosophy. Oh, interesting. From the University of California. And Jim, thank you for your service. He is a former U.S. Army paratrooper. He's jumped right into the screen today. Ladies and gentlemen, Mr. Jim Woods from jimwoodsinvesting.stockinvestor.com. Nice
transition, John. I like that.
Oh, I saw that at the end. I'm like, oh, it's perfect. I got to throw one of those in. Right?
It was in an ironic twist. One of my friends, his son just graduated from airborne school.
Oh, nice.
And he was excited, telling me all about it. And I said, yeah, I know all about that.
I've done that. How many,
it was quite exciting, though.
How many jumps have you had?
Around
Stop
45,
counting?
around 45,
okay.
Something like that. Yeah, I have to check the log, but something like that,
45 times out of a perfectly good airplane.
It's actually less than a lot of my colleagues that spend a lot of time. So
it's a lot for me.
Yeah. Each one of them gets a little bit more perilous as well. You think, is this going to be the one?
Right. Well, it's trained you for a life to doing this, where the stress levels can get a little bit high.
That's
After you've jumped out of a plane 40 times, you're like, yeah, this is easy, right?
Yeah, that's true. I mean, it is actually good. I think it goes to the psychology of investing. A lot of times, people that are doing what we're doing, our viewers right now, I'm sure, have a little bit of that kind of, knowledge that they need to take chances a little bit to achieve what they want to achieve in life. Now, of course, you don't want to jump out without the parachute,
right?
So that's where the smart element comes in. And so we'll talk about how I do that in my services in just a few minutes.
All right, awesome. I'm looking forward to it. We'll turn off our cameras. We're here if you need us, but you got screen share, and It's all up to you.
Yeah, let me get that. Make sure that that I am sharing.
We can see you.
Okay. Let's see. I need to go to slideshow. Okay. All right. We good? Okay. So as the guy said, I'm Jim Woods, and today I'm going to be talking about my trading service called Bullseye Stock Trader. Now, this is a stock and options trading service. It's usually one or possibly two hotlines per week, and I tell you exactly what trade I want you to make, what to buy, where, at what price to buy it, what our stop price would be, and I also tell you what call option I like on those, and we'll talk about the exact way to do that in just a minute. So, how to hit the bullseye with your stock and options trades. Again, Jim Woods is my name. I'm the editor of the Bullseye Stock Trader, which is a service we'll talk about today. But I also have a options only service called High Velocity Options. I also have a newsletter called the Intelligence Report, which is a more of a long-term uh, dividend oriented buy and hold type of service, but we also have trades in there as well. And then Successful Investing is my other newsletter, which is that is a system based buy and sell signals based on long term trend following strategies. I also have a daily publication called the Eagle Eye Opener, which is a morning market briefing that you can read in like 8 to 10 minutes. Have everything you need to know for that morning. So when you step up to trade, you'll know exactly what to look for, what the market's looking at. And then my e-letter is called the Deep Woods. That's free. I encourage everyone to sign up for it. It comes out on Wednesdays. And the cool thing about the Deep Woods is we talk about markets there, but we also talk about all kinds of stuff. We talk about politics, philosophy, society, music, whatever I think is interesting, I'm going to write about it. And I always seem to be able to tie it to the markets because when you look at the world, the markets are part of everything. Your money, your decisions, they're all part of everything. So I encourage everyone to check that out, the Deep Woods. I'm also the co-editor of a publication called Fast Money Alert with Mark Skousen. I'm sure many of you know his name. And then finally, I have a podcast called The Way of the Renaissance Man. And that is a podcast where I talk to interesting people that I think will add to the world's knowledge base. Recent guests have been Kevin O'Leary from Shark Tank, basketball star Shaquille O'Neal. So I have a lot of interesting guys on there, and guys and girls, and we talk about all kinds of stuff. So check that out. Ray of the Renaissance Man is the podcast. And all this, you can check it out on jimwoodsinvesting.com. That's the main hub for all these publications. All right, let's dig into our presentation today as far as how we do this. So the we mentioned a little bit about the military. We always have a mission statement. Any organization that's going to succeed has a mission statement. Military has one, businesses have one. You should have one if you don't already. So the mission statement for the Bullseye Stock Trader is as follows. Bullseye Stock Trader, which is the acronym BEST, Bullseye Stock Trader, and we think it's the best service, so hence the acronym, is a stock and options trading service that seeks out stocks that are outpacing the market in several key areas. So check the wording here, because this is going to be a theme throughout. We want stocks that are outpacing the market. Okay, that means we want to find the winners. Okay, this is a service that is identifying the best of breed, the best momentum stocks at the moment. We're not looking for undervalued plays. We're not looking to short any stocks. We're not looking for ETFs and sectors that are possibly going to do well in the next 12 months. No, we want stocks that are breaking out right now and that we think will continue to break out for the next 2 to 6 months. So that is our purpose. That is our goal when we approach any company. And that's important because whenever you're investing, that I don't always do that with other services. Sometimes we're looking for, a good value. Sometimes we're looking for a long-term hold. Sometimes in the option service, we're looking a lot of times at buying puts on stocks that we don't like. But in this service, it's all about buying stocks and buying options of stocks that are outpacing the market, but not just outpacing in price, in several other key areas as well. So let's take a look at that. So how do we do it? Well, I start by identifying stocks that have what I call the big 5 major characteristics that have proven over time to really drive a momentum stock higher. Okay. Now, what are these 5? Now, when I ask this question at like in a live money show or an interactive event, I asked what people they think is the biggest driver of stocks. So I'll actually ask that right now. If you guys, do you know what the biggest driver of stocks is, or biggest predictor of a stock's continued success? Anyone in the chat? Okay, so Don says price action. Don is 100% right. Okay, price action is the main thing. And then another one, Oliver says earnings growth. Okay, I suspect that Don and Oliver might already either subscribe or know about Bullseye Stock Trader, because both of those two answers are the first two criteria. So let's dig into those a little bit. Number one thing is, there we go, sorry, relative price strength. Okay, mention price because winning begets winning. A stock is only as good as the people that want to buy it. Okay, so which means price is the number one determiner of strength in a stock. So all the other stuff, all the other metrics are meaningless if the stock price isn't going higher. So a company could be great, but the stock price isn't going anywhere. You don't want to own that stock in this style of investing. Okay. So how do we find the stocks with the strongest relative price strength? Well, we screen for stocks that are outpacing their peers for the past 6 to 12 months on a relative strength basis. Okay. That means we want the consistent, proven winners that are outpacing. In this case, I look for stocks that are outpacing at least 80% of all the stocks in the market. So I want that top quintile. I want that top 20%. That's for just to start off. I don't want to even look at a stock that's underperforming the market. Not in this newsletter, because the key is we want stocks that are moving powerfully to the upside. And that's how we know that their chances of them continuing to do so are much greater. So if I look for stocks in the top quintile, the top 20% of outperformers, that's a very good way to begin the screening process. Now, another way to put this is you only want thoroughbreds. You do not want any donkeys in the service. Okay? All right. Second contributing factor here that I look for of the big five is earnings power. Okay? Now, this is something that one of the Oliver, I believe, in chat said, to the victors go the earnings spoils. Well, that's earnings growth. Okay. So the second element of the service is we screen for stocks that are outpacing their peers for the past several quarters and the past several years, and in terms of their earnings per share growth. So we want a company that's established, that is actually earning a lot of money, and that's been growing their earnings, not just one-off in a quarter, but for the past couple of quarters, and preferably for the past couple of years, because that shows that it's a sustained company that knows how to make profits and knows how to grow their earnings, because investors buy earnings growth. Okay? And that's what the smart money wants. And there's a lot of stocks that don't have much earnings that shoot up higher, but those are usually the bubble stocks, the kind of the .com stocks, or that style of stock. And we don't want those stocks, because you generally don't stand up, especially when things get a little bit rocky in the market. But stocks with strong earnings growth and with strong price performance do tend to hold up. Okay? So here again, we want the consistent, proven winners that are outpacing, again here, 80% of the market. So here again, I'm looking for the top 20, the top quartile, as it were, or quintile, in terms of earnings per share growth. Okay? Because I know value is a lot of investors learn about how they should look for a stock that has good PE ratio or PEG ratio or value, and we think the value is in the earnings growth. Okay, especially when your time frames are like this. So strong relative price strength, strong earnings power. Okay, the third element here is the technical analysis. Okay, because the beauty is in the pattern. So once we've screened for what I call the best of breed stocks in terms of the price and the earnings power, Then I need to check out the technical pattern to determine if it's actually a good time to buy or maybe time to not buy. So I want bullish chart patterns. Okay, so I want the chart patterns to be reflective of traditional bullish chart patterns, such as the cup with handle, which is the most powerful, a flat base, second most, double bottom is another one that's powerful. And I use that to determine if now is a good time to buy that stocks, or if that stock is a good candidate, because sometimes stocks are overbought. I mean, Nvidia is a perfect example of a stock that just shot up crazy, and it could be argued that it's quite overbought. Although I still like that stock, and I like that company, I like that story, and we'll get into the kind of the story element here in a moment. But anyway, we use the stocks to determine. We use a chart to determine if now is the right time to enter, or if it's time to avoid. Because remember, we want the best stocks, but we also want them to own them at the very right time. Okay. Fourth category here is industry leadership. Now, the old saying, when you're hot, you're hot. We want to shop in the aisles where the best sellers are found. Like, not that many people go to bookstores anymore. I still do, but they're a lot harder to find. But when bookstores were really, really, really popular, you would go in and you would look and you see people browsing around, and guess where they'd be browsing around? In the bestsellers and the new releases. The sellers, the hot published areas. Okay, that's the kind of stocks we want. We want the best sellers. What we don't want is to be in the bargain bin in the back. Okay, because that means they're not selling, and there's no action there. There's nobody actually going up there and buying. They just, maybe someone will browse around and see something that they find interesting. But if you want the hot new book from the hot new author, you want to shop on the bestseller list. And industry leadership is the market's version of that. Okay? Because that's where the smart money shops. And the smart money, the big money, is what drives the relative price strength. And what drives the relative price strength usually is the earnings growth. Okay? So tech stocks over the past several years until last year, of course, were a prime example of industry leadership. Now, funny thing is, this year is where the real money is being made again, of course, and it's been concentrated. Only 5 or 10 really big cap stocks have been pulling the market all the way through. But that's because that's where the growth is still. Last year there was some growth in energy, and that's about it. And the market was not growing. So tech is back in the growth mode, and that's a good thing in my opinion. So we want to go where the industry leadership is. AI isn't a good example of that right now, although that's gotten to somewhat of a bubble kind of feel to it. But we can talk about that in a minute. But that's the kind of what I call news Q, which is our final element here of the 5. So what's news Q? Okay. So my friend Penn Jillette, is the magician, says the medium is not the message. The message is the message. So that's a little twist on the old, the medium is the message thing. But in when you're looking at the markets, you want to kind of read what the message is, and that's what I call being able to have good quality news Q. Or so think of it as like an IQ, only about what the market is doing and what really matters. So here's how I define it. It's like news Q is the ability to take the market's pulse on a specific stock or industry to see if there's enough positive or sometimes absence of negative news items in that stock that can drive it higher. Okay. So that could be a new product, could be a new CEO, it could be a new marketing strategy, it could be some kind of thing that would drive a new contract from like the defense industry, something like that, something that a merger or some kind of new adoption of something. Like AI is a perfect example of that. Everyone wants to get on and to be on that new powerful wave of technology that's promises to to not only destroy the world, but to but to make a lot of people a lot of money along along that route to destruction. So, but the news cue part is the interpretation is what I call part science, part art, part market awareness, and a lot of applied experience. So to get to the level where you know what is actually going to move markets, it takes a lot of kind of time and grade. You need to actually know what you're doing, and you need to be able to kind of sift through the noise. And I think that's what a lot of experienced people like myself are able to bring to the table here, and especially with all of the other metrics involved. Just the news cue part of it just adds that extra element of art to it. And by doing that, you will actually we'll be able to distinguish ourselves and really hit the bullseye. Okay, so, and then here is what I call the options force multiplier. Now, in the military, some units are called force multipliers. They help train units, and they help make a unit more powerful. A real good sniper is a good way of increasing your effectiveness as a force. So, in order to supercharge our returns, we use the power of options. Okay? So we look to buy slightly out of the money calls, okay? Slightly out of the money calls, with expirations of anywhere between 2 and 6 months out that are trading at an attractive price. Okay, so if we're correct about the direction of the stocks we buy, and we buy them as they're beginning that new uptrend, right at that good technical buy point, then the out of the money calls will also rise in price if we're right. Okay? And often that'll be a dramatic rise, and I'll show you some of those kind of similar rises in a moment. But the thing I like about this service and this strategy is it's the easiest option strategy that you will ever encounter. Because all you have to do is buy a call. The exact call I tell you to buy, and you buy that call. And that's it. You don't have to straddle or strangle or butterfly or condor or anything like that. It's very simple. Now, if you want to do these other things, by all means, go for it. But if you just want to get an added kind of juice on your return, you supercharge your return, you use the force multiplier of an out of the money call. All right, so how's that working out for you? Here are some of the relatively typical performances that we have in the service, and in the time frames that we have them. So here is, these are these are all trades that we've made, in the last couple of years that reflect, a typical kind of trade. So, for example, Thor Industries, we bought that a few years ago. I'll show you some charts in a moment. 45.75% gain in 63 days. That's the kind of trades we do. Netflix, 19.8% in 22 days. Nvidia, this was in 2021 before the mania, almost a 56% gain in 98 days. And then we had this one stock called Voyager Digital, which actually the company's not even there anymore. But at one point, the crypto craze and Voyager was huge. And we actually made a 244% gain in 56 days there. So, and we didn't even there was not even any calls on that to take advantage of. So, but we just did that in the common. So once in a while we'll hit a home run like that, an outlier on a regular stock. But you can see some of these call options are linked to these buys. For example, the Tractor Supply TSCO, we bought an October 130s for a gain of 151.95% in 56 days. So that's the kind of gains we're looking to get. In those same I mentioned Thor Industries, we bought October 130s, and we bought September 70s and gained a 301.81% in 63 days. So that's the kind of big wins we're looking for when we buy those slightly out of the money calls. Now, do they all work out like that? Of course not. But enough of them do so that overall the gains are quite substantial, and I'll show you that in a moment. One of our biggest wins was in the match group, September 75 calls, 447.3% in 41 days. So that is the kind of verified trades that we'd like to do in this service that show its efficacy. Now, they're not all winners like that. Sometimes, we get stopped out. Sometimes the options need to be sold, at a loss. I mean, there's no doubt about that. So because that's part of this game, and anybody tells you that it's not is lying to you. You're going to have buys. You're going to have a lot of winners, and you're going to have some losers. But the key in the losers is to make sure you keep those losses down to manageable levels. We always put at least no more than a 12% stop on each position that we play. So I think that's enough to give it a little bit of a breathing room, especially in a tumultuous market that you won't get stopped out on. But it's also like at a level enough to know that you were wrong when you purchased that position at that moment. Because you always, whenever you buy a stock, you always think it's going to go up. You're not going to buy it and hope that it's going to go down. So if you're wrong, you're wrong, and you just have to admit it and you have to move on. That's part of being a big boy, and knowing that you're going to take some losses, but you're also going to get these kind of big gains too. Okay, so let's look at some of these. Mentioned Thor. Here's that gain. Now, if you look at the bottom here, you'll see in May of 2020 is when we bought this stock, and that was right when it was going above the 50 and 200-day moving average and breaking out, and it broke out really big. Okay, now this is during the pandemic, and Thor Industries makes RVs. Okay, so the news cue here was people still wanted to be able to go on vacation, but no hotels were open, no cruise lines were open, no amusement parks were open, but people still wanted to bug out and enjoy the world. So they bought RVs, and that's what happened. And the stock just surged right then in anticipation of that. And that's exactly what happened. We sold it as it started to pull back in early July, but not after we had a 45% win, for almost 46% win in the common shares, and a 301.8% gain in the calls. So this is a good combination of technical breakout, earnings, and especially news cue, knowing the kind of that this was a pandemic play during that time. And once the stock started breaking down, we got out. Now, after we got out in early June, we saw the stock go back up a little bit more. We're thinking, okay, well, maybe we made a mistake and should have stayed in it a little bit. No, but we captured that big gain. We didn't get greedy. And then what happened in August, it broke back down again and continued all the way down, through October and November. So this is a kind of a prime example of how we hit the bullseye in that sweet spot there from May to July of 2020. All right, Taiwan Semiconductor is another one of our big wins. This was towards the end of 2020, and then early 2021. We held this one for just a few months there, and we managed to get a 55.5% gain in the common, 243.9% gain in the November 85. So here's a combination of knowing when to buy, like knowing that there was a breakout in September, and there was a kind of a shutdown, so to speak, or a pullback in January that was plenty enough for just a few months of a 55.5% gain in a common stock. That's anytime you get a gain like that, that's when you want to make sure you don't get greedy and exit, especially when you have 243.9% gain in the calls. InMode is another one, biomed company. This was in June of 2021, and we got rid of it just in a little bit over 3 months for a 67.28% gain in the common and over 250% in the November 95 calls. Got a lot of, these, I'll give you a few more, but you guys hopefully get the idea here. We're buying strong stocks with strong relative price strength, strong earnings growth, positive or bullish chart pattern, and that are doing something at the moment that is going to help drive the price up. Now, Costco here is one of my favorite companies, although I must admit, I rarely go into Costco, but it's a tremendous company. And back in September of 2021, it was a tremendous stock. It had just fallen back below its 50-day average, but then it began to break out again in October. We owned it right at that right where when it first started breaking back above that 50-day average, and held it for all the way till January of 22, at which point that was almost a 22% gain in the common. But the calls really did well. We hit the bullseye on the calls, almost a 300% gain in the calls. People anticipating, a discount shopping spree, and that's what they got. And that stock really did well at that during that particular period. And that's the thing here. We're not buying and holding these things for the long term. We're buying them, and hopefully between 2 and 6 months later, we're out. That actually reduces your risk in the sense of your exposure. Like if you know you're going to buy a stock and get out of a stock in a couple of months, 3 months, 4 months, 6 months, that's way more comforting than knowing that you're just going to buy it and whatever happens, you're just going to own it. I mean, there's a place for that, no doubt. But and the flip side is like a day trading type position. You're going to be out of that too, so you're limiting your risk or your exposure, as it were. But that's not enough time. I mean, unless you're glued to your computer, that's hard to accomplish as well. So I think it's a sweet spot. And, the 8 weeks to 16 to kind of 32 weeks is a good time frame to see if a stock can actually make that big run. And that's usually how long these big runs last. Palo Alto Networks. This was last year, 2022. We only had this stock for a couple of months, but we managed to get almost a 14% gain in the common and almost 100% gain in those June 560 calls. You can see the chart here. If you look down below, you can see right around February of 22, when it kind of fell back down and then started breaking back up. That's when we got in, and then had a little bit more volatility along the way, but still kept on going after around mid-March. And then by sort of mid to late April, when it started falling back down again, we exited, but not before we got that really good gain. So you got to know your charts. Okay? Cleveland Cliffs, another company that was a good win for us in 22. We only had that one for like 6 weeks, but still managed to do well with almost a 16% common gain and 135% in the make calls. So I mentioned NVIDIA. Here's the last one I'll show you on this. We were kind of we're aware that the graphic chips market was doing really well back in July of 21. Held this one during an earnings period from all the way to November of 21 for that 55.8% gain in the common and 54% in October calls. So let me go to this slide here, because this is a slide that I think that will encapsulate the entire service. And if you're going to take a screenshot of anything or a picture of anything, try this one. Bullseye Stock Trader Cheat Sheet. Okay. Screen for the high relative price strength. Screen for strong earnings power or growth. You buy on the bullish breakouts, the cup with handle or flat base. You buy on the bullish news cue. Okay. You buy slightly out of the money call options. You hold until the momentum ceases. And then you set those stop losses at approximately 12%. Now, here's the metrics that I think matter most. Average days held in these positions is 56.3. Okay. So we're not talking about long-term hold here, guys. We're talking about just a couple of months, maybe even less than a couple of months. Now, the average annual return that we've seen since the inception, which is like about 3.5 years ago, all the way through, this is through January of this year, okay, is 122.05%. Okay, that's the average annual return that we managed to achieve. So think about that in dollar terms. $100,000 would become 222,050 in 1 year. And then that same 100,000, if you just did all the trades, winners and losers, would become about 1.6 million in 3.5 years. So we're this is the kind of service where you buy it, you buy into these companies, you make the money, you get out, and you keep on growing your portfolio. And in doing so, you're going to have big gains. You're going to have 100% type of gains, or that's the goal, of course. Now, I'm not saying we're going to have that every year, or that we're, that we can do that, for in perpetuity. But that's what we've done so far, and I'm very proud of that track record, and very proud that I've been able to help people grow their money like this. So, well, we'll go through these real quick because I know I want to leave some time for questions. This is a little bit about me. I've been in the industry now. It says 25 years, but as I age, I think that I might have to revise that number a little bit. I think I'm coming up on 3 decades now. So I mentioned earlier that I worked with Investors Business Daily. I actually work with the founder, William O'Neill, on writing courses in what he calls a CAN-SLIM methodology. Some of you might recognize that DNA in my stock selection approach. I learned straight from the best, so it's not a big surprise that I would have that in my head, although mine's slightly different than his. But I just found out actually this past weekend that William O'Neill passed away, and he was at age 90, and I actually wrote about it in the Deep Woods E-letter. So I suggest I recommend it. Anybody wants to find out a little bit more about him. He was quite a great man, and it was a sad loss for our industry. Did quite a bit for our industry. So and then I was head trader at a private hedge fund after that. Worked as an advisor at Morgan Stanley, and I actually worked at the World Trade Center for some time. And then I worked for Doug Fabian as his editor for Successful Investing. And then I mentioned Mark Skousen and I worked together on our service, Fast Money Alert. Also, the intelligence report was actually a former publication of Dick Young, who's a very luminary in this industry as well. So I've been fortunate enough to work with a lot of really, really interesting people. And then also was in the Army, as we mentioned earlier at the beginning. So it was a fun job, but that's a young man's game for sure. No. So playbill here, TipRanks. TipRanks is a independent ranking service. They take people like myself and people that make our kind of recommendations, and they look at their track record. Okay? And they look at it and say, well, what has this guy done? So now this is throughout a lot of my different services, but actually, I don't know what my ranking is at the moment, but at one point I was number 1 out of over 7,000 people based on my success rate and my average return. So proud of that. I'm gonna try to continue to be up there in the top. These things fluctuate, but if you keep on doing what you know works, it's going to keep on working, and I'm a big firm believer in that. So the last couple things here I want to leave you with is this should be a fun process. Okay, so one of my business heroes is Richard Branson. The guy has more fun than anybody I've seen as a top guy. Like you can see that the guy is just enjoying his life, making money, having fun doing it. So he says fun is one of the most important and underrated ingredients in any successful adventure. Okay? If you're not having fun, it's probably time to call it quits and try something else. So that's true of what we're doing right now, and what you're learning all this next couple of days in these seminars. Keep this in mind. If what you're doing is not fun, if you're not enjoying the doing, you're not enjoying making money, you're not enjoying the process of learning, you're stressed out too much because you're doing this trade or that trade, I recommend not doing it. Okay, this is fun. This should be fun, and it is when you get 120+% annual return. That can be pretty damn fun. So, and conversely, if you make a mistake, you should look at it as just a learning process. And hey, this is something that I learned. This is something that I try not to do again. But try to have fun doing it, because in life, you must love the doing, or you're never going to be able to get anything done for anyone. And that includes for your portfolio, your business, your family, whatever. Have fun. Okay? Life's too short not to. Okay? All right, now the final slide here is my publisher says this is the most important slide. So I want to stress out that this summer summit here, we have a very special offer for the Bullseye stock trader. Okay? So regularly the service is $19.95 per year, almost $2,000 a year, but we have a summit off it today, and it's one of the most attractive offers I've seen. $399 for the first 6 months. Okay, now that's our most attractive entry price. And the great thing about this is it renews every 6 months subsequently for $499. So you will never pay more than that. So that's your price every 6 months, $499. Now you saw some of those gains that we made, and that's that. So even if you have a small amount invested, you way more than make up for that in the that price of admission, as it were, very quickly. So that is what I recommend everyone do. Try it out first 6 months. If you're not happy with the picks or the results, there's no need to continue. But we don't have very many cancellations, and the reason why is we've done really well in this newsletter. This is my favorite newsletter to do. It's my baby. And like I mentioned, I have fun doing this. Okay. Every time I look at stocks and charts and I look at the relative strength measures and the earnings growth, and I see those charts and I know that there's something good about that specific industry, I get super excited. I have fun. I can't wait to tell my subscribers about this one because I think we're going to do really well in here. And sometimes we don't, and that's okay, because that's what, there's too many variables to be able to get right every time. But if you are right consistently and right much more times than you're wrong, and you maximize those big gains, minimize your losses, you are going to be a successful stock trader, and you're going to be able to hit the bullseye with your trades. So with that, I think we have a little bit of time. Guys, I think we have question and answer time. So I wanted to leave enough room for that. So I don't know, John, do you want to take the
Sure.
moderator role, or
Absolutely.
okay, yeah,
I'll fire them at you, and you answer them to
sounds
the best
good.
of your
Yeah,
ability.
I'll do. Yeah, there you go. I have fun doing
So,
it too.
Jim, which charting platform do you recommend or suggest?
Charting platform. Uh, well, it depends on I mean, for it depends on what you want to do. I like a platform called Y Charts. That's one
Hmm,
of my favorites.
okay.
But I also look at startcharts.com because they have good. I like their kind of ancillary metrics that they have on there. You can get really involved in these stocks. I mean, I also use a Think and Swim platform for looking at options, things like that. So there's a lot of good. I mean, there's plenty of good tools out there to help you identify patterns. But Y charts is one I like. I don't feel the need to to get too overly detailed when it comes to the chart, real time charts and things like that, because I kind of know what patterns I'm looking for. So, but Y charts is great, and they have good, information on there as well. A lot of good, fundamental information. So, if you want a combination of what I look for, like the earnings growth and the price performance, things like that, that's one of the ones I recommend. I also recommend stockcharts.com. That's very good. And then just for your news and your information on companies, I like Investors Business Daily. I'm biased about that, but I would recommend that, like say over the Journal, even though they're the same company now.
Oh,
But then
really?
but then again, everyone reads the Journal too, so you have there's a lot of sources out there for news, so you have to be aware of them all.
Okay. I have someone in the chat right now. Marisol is apparently interested in grabbing the system. She's a little Little curious if you can elaborate a little bit more. And Marisol, if you're a guy, I apologize, but I think it's a woman's name. You never know, so got to make sure I'm clear. Could you please elaborate a little more on how the system works? Maybe a few more details for Marisol.
Okay. Sure.
I mean, without giving away all the secrets, of course.
Yeah, no, I mean, is really, I mean, the secret sauce isn't, there's not really a huge secret sauce other than the only thing that I would consider the secret sauce is my own news queue overlay on these things. So, because I mean, knowing what I think really matters to the markets in the next 6 months. So that's just a matter of like, of kind of a guru's like sensibilities on it. Uh, so the basic methodology is identify the best stocks, make in the best the top performing stocks in the market, over the last 6 to 12 months. Then make sure they have strong earnings. That's the second step. Then you make sure that the stock chart itself is bullish and it's not overextended, or if it's not underbought. You kind of want to see like that good cup with handle type pattern, or a bullish like a double bottom, something like that. So that's the first three things. And then you want to make sure the industry is strong. You don't want to buy a weak industry. It's better. You have a better chance if it's a stronger industry, if it's like a sector wide kind of, money flows, because the money flows determine that relative price strength. And then the last element is the news queue. So, and then the element of the option is just once you've identified a stock that you think is going to do well over the next 8 weeks to say 6 months, then you look at the options chain and then you see what the best options chain would be. Now I like to look at at like anywhere from 2 to 6 months out of expiration. 2 is a little bit on the short side. I prefer 3 to 6 months out. But see, it's June now, so we're buying like September calls, October calls, that kind of thing. Sometimes even December, if the price is more attractive, going a little further out.
Oh, okay.
Yeah.
Jim, I do apologize. I just made you to say all that. And what Marisol really meant was she wanted to know how the system works from her end as far as like, and I
Oh, okay.
do apologize. I
Oh, no problem.
read
That's
it.
problem.
Yeah.
I think
So
hopefully it was enlightening.
yeah, no, it was, but as I'm reading it, I'm like, I screwed up. Sorry about that. So I
Oh,
had to
okay.
throw
So
myself on
yeah,
the
so
fire there.
no problem. So from a practical standpoint,
Yeah. So
what'll happen
sorry.
is, so I believe there's a link in the chat box we have here, like for
There
an
is.
offer that goes straight to a landing page where you can sign up like right now. So it's Tuesday, right? So you sign up today on you have a hotline that comes out every Thursday, for sure, one per week. You will get an email that will have all the trade like instructions for that week. Okay. And you will get it. Now, if we have, so now we don't always have a buy every week, although we average, 3 to 4 buys a week, or a month rather. So you will get an email that tells you like why I like what the stock is I like, why I like it. I try to make sure that you understand why I'm buying it, so you understand my thought process behind it. I'll go over the relative price strength on it. I'll go over the how it's done, over the last few months. I'll go over what catalysts I think are going to drive it higher, and then I tell you exactly to buy it, whether it's at the market or a limit or something. Usually we buy the stock at the market because it's hard to get those limit things like on for everyone. But then also put the stop loss in there well, I'll tell you where to put your stop loss. And then I'll tell you exactly what call option, what ticker symbol to buy on that stock. So there's really nothing you have to do other than read the alert and take the action. So, and then you have access to the website, which has all of past alerts like that, and has a full list of the portfolio as well. So if you missed a trade, or if you're looking back at some of the trades, that'll be on there as well. So it's very simple. It's very easy. Like I said, it's the easiest type of options trading you can get. So at least once a week you'll get a hotline on Thursdays, and you may get a special alert during the week if a stock jumped up higher on earnings and we want to take gains. then we won't wait till that Thursday to do it if we think now's the time. Or if something hit a stop, we'll let you know that as well, so to make sure that you know that you're out. If you haven't already put the stop in, that you can get out. So that's that. That's basically it in a nutshell. It's a very simple way of I want to keep things as simple as possible for people, because that's how you have fun. The more complex these things are, the less fun you have, because you're worried about whether you're, going to do this or that, or got this right, or, clicked on this button right. You don't need that. You don't need to download any software or anything like that. You get an email. Oh, and you also get a text alert as well when there's a new trade, or when that Thursday comes out. So if you're on the golf course, one of my subscribers was when we launched it, then one of the new trading services that came out on a Tuesday, he was kind of jokingly mad, because he's like, well, I want to subscribe to that, but a Tuesday is my golf day. If I miss it, right, I'm going to miss an options trade. I said, well, you're going to get a text. You can just do it on your phone while you're on the golf course and make your day better anyway. He's like, yeah, that's a good idea. So we make it as easy as possible for you to never miss a trade.
Okay, I got one last question for you. By the way, a few people in the Q&A in the chat all saying great presentation. They enjoyed it. Here's your last question. He says, it's from Oliver. Oliver says, do you always put a stop loss with your order and take profit, or can they be put in later?
Well, I always recommend putting that stop loss in when you buy it, just so you don't have to worry about it in case it kind of turned down on you. You missed, let's say something, stock falls like on earnings. That doesn't happen very often, but it sometimes can, and sometimes you'll wake up in the morning and the stock will have pulled back quite a bit below your stop. It actually happens. It doesn't happen frequently, but it does happen. And so I prefer that you have that stop on when you first get in. But now, if you're talking about buying something and then not selling and kind of letting it ride or whatever, you could certainly do that. I try not to be too greedy on these wins, because you want to let a stock that you buy move higher, but you don't want to wait till it starts to pull back and then say, oh well, I raced all my gains, well now I'm a long-term investor. You don't want to ever do that. You want to buy, because the reason why we're in this stock at the moment we're in it is because we suspected it's going to continue to go higher over the next 2 to 6 months. And if it does, and that move is made already and it starts to pull back down, that's when we get out.
Okay, so you recommend setting everything up in advance. And the last part of the question is, do you ever adjust your orders one way or the other?
Yeah, we can adjust the stop. You could definitely raise the stop. We do that all the time. So
Okay.
if we buy a stock, let's say it moves up 20% in the first month, we'll raise that stop loss up, because we want to make sure we keep that gain. And sometimes it'll pull back and we'll get stopped out, but at a 20% gain. And then, every once in a while it'll move back higher after that. And so you say, well, you missed a little bit of upside there, but okay, you still gained, you still made like 20 or 30% or whatever in the common, and most likely much more than that in the option. So when you have a big run higher in a stock in a short time, you always want to protect that gain. You never want it to go back down to a loss if you can avoid it. So because there's going to be enough stocks that you buy that won't break out like you thought they would. So you'll keep those losses down. But if you maximize the gains, that's the way to make sure you have a winning strategy overall. And keep in mind, anybody can win on one or two stocks, or anybody can lose on one or two stocks. But you want to look at it in a holistic way. Like, how is my momentum portfolio doing? Am I hitting the bullseye? And that's what you want to do. You want to make sure that you want to make sure your portfolio in this type of strategy, you want to make sure the stocks you own are doing what you want them to do for you. And that actually brings up one more point here. Like, I think to Marisol's question, we only have like anywhere between 5 to 8 positions at any one time. Okay. So, and that's common stocks. If you add in the calls, then it might be, it's double that, but you don't want to have too many open positions at any one time, because, not that many stocks are going to break out at any one time based on your strategy. So you got to keep that in mind.
Well, Jim, I always say the most important thing that people have that they can offer people is their time and their wisdom. And we appreciate both of yours today.
Oh, thank you.
I enjoyed it. I thought you covered a wide variety of things. Marisol said thanks. A bunch of people said you did a great presentation. For those of you listening at home that have also given us their time to learn today, Jim has an offer inside the chat. You guys can simply click the offer, and you can end up right at the page. It's a great deal. Gives you an opportunity to try out the service for 6 months for $3.99, and then it renews at, I think, a reasonable price of $4.99 every 6 months. A lot of stuff involved. And obviously, you'll be able to get to spend some quality time with Jim, where you'll learn more and more of what he taught us today. Jim, we appreciate your time today. We really do.
Thank you so much, John.
Thank you very much, Jim.
Thank you, Rod. I appreciate you guys. I appreciate everyone. Give it a shot and have fun out there. Remember, life should be fun. So enjoy.
Thanks.
Fantastic.